Good morning to all of you. Delighted to see the turnout here and the analyst community, which is a very important stakeholder for us this year in full strength. And in the next 15 minutes, I'm going to talk to you about the commitments we made in the last investor meet in FY20. Where are we against that? What plans do we have for the future, and how are we poised to ensure that we deliver on the commitments we're going to make? Just a snapshot and look back on FY20 analyst meet and where we are today. For your reference, all the numbers are December 20 and December 23. So it's consistent across all the slides. You will see that this is the reference point between then and now. If you look at a few callouts from this slide, the key messages from this slide, look at the advances and deposit number. The total business of the bank is about 3.7 lakh crore. It took us 5 years to go from 1 trillion to 2 trillion on the business, 2013 to 2018. It took us 3 years to go from the second to the third, 2018 to 2021. And in less than 2 years and a quarter, probably early FY24, we'll go to the next trillion. So what it shows is the pace at which the business has been growing has been compounding, and that gives me enough confidence to say that we'll hit the 5 trillion mark in less than 2 years. That is, the trillion from fourth to fifth is going to be faster than the third to fourth. So the momentum, despite all the economic situations, despite all external factors, despite COVID, despite global disruptions, you've seen that the business has grown commendably well. The second call out, which I'll relate to what Shyam had said, is on the PCR. We moved from 45 to 69%. This is as per how we report. I know the analyst community work it out, and it's closer to 71% as we speak for December 22. We wanted to, like Shyam said, want to benchmark ourselves against the top 5 banks, and we want to make sure that on all parameters we are seen as amongst playing against the top 5. So we wanted to ensure that as a matter of prudent business practice and to ensure that we have enough strength, we increase the provision coverage ratio. If we hadn't done that, the ROA numbers would be very different. It would be much higher. But that's not an option we want to look at. As governance is a very important aspect of the bank, and we made sure that we prudently provided for that. Best-in-class asset quality. Despite the COVID period and all the restructuring and whatever things happen, we are amongst the best in terms of the GNPA and NPA in the industry. Credit cost at its lowest, I would say, at this stage. And last but not least, the CRAR. If you look at the CRAR, on the left side there is a small box which talks of 13.64 then, and the number now. But what is important is if I add the pro forma 9 months retained earnings for this year and for the same period, it was 14.88. We would be 14.81 as at December. So it's just a 7 bips movement between FY20, or rather December 20 and December 23. So very strong position in terms of our capital adequacy. We raised capital only once in between in the interim, which was the preference shares of 5%, which was picked up by IFC. So the retained earnings are good enough to ensure that it has been good enough to take care of the growth which we have seen. And the next box below that is the RWA, this is advances against RWA to gross advances, it was 59%. It's come down to 54%. So we have to make sure, or rather we have ensured that capital is being used very efficiently. And it also demonstrates how the bank has been adapting to the changing economic situation. I'll use that to go to the next slide. When I talked about adaptability being nimble, we have to change course at short notice to make sure that correct decisions are taken. And this is where I think I would call it as thoughtful execution. Because what we did during the COVID time was to ensure that the risk parameters which we had was relooked at. Our lending during those particular period was directed towards top-rated corporates. The gold loan portfolio of the bank grew from, it was about 7.4% in December 20 of total advances. It's now close to 11.5%. So a combination of these factors ensured that the risk-weighted advances to gross advances was actually improved. And at a later stage, when I talk about the mix change which we are going to do, it will also tell you how this will help us in the future. So the key message from the first slide is we delivered on the promise which we made during the last investor meet. During COVID years, it also gave us an opportunity to invest in our IT infrastructure, ensure that the stability and scalability of platform was in place, strengthen the partnership with our fintech partners, BCs, and laying the foundation and ecosystem so that when the growth opportunities came back, we were able to capitalize on it and deliver on the higher growth rate which we have demonstrated over the last 6 quarters. Another important development during this 3 years was, you'll be glad to note that the bank has now turned PSLC positive. We used to be buying PSLC, there was a cost which was being incurred over the last 3 years. And this year, FY23, we will be net PSLC positive. In fact, we'll have a gain, a small number relatively, but still we have been selling. So that's one remarkable shift in the focus. And what it has also demonstrated is the fact that PSLC is now seen as a business opportunity and not, it's just not an obligation which we have to meet for a regulatory purpose. Gives us the confidence that in the years ahead, we'll be able to make this as a separate business unit and make it a standalone profitable unit. What we also have to do as we move along is to ensure that we review the assumptions and make course corrections, as I said. It's always good to see conclusions and react, but what really matters is reviewing the assumptions behind the conclusion. The outcomes, it's just an outcome. You do certain things, you'll see the outcome. But as an organization, as a learning organization, we ensure that we constantly review the assumptions behind all the actions which are taken and make sure that we course correct. That's where the nimbleness comes into play. If you looked at the second part of this 3 years, in the last 6 quarters, so it's given us great growth opportunities and how the bank has been able to capitalize on the infrastructure which was created in the early part. The high margin products, which like CVC, MFI, have all kind of picked up pace, credit cards, and now we are seeing growth rates which are just like the start of putting us into the next phase of growth, which I will talk to you about in a few minutes. This slide encapsulates the momentum which we have seen, and I will pick one particular aspect of this, which is another key driver of our ROA, which is the fee income part. If you see the fee income part, all the investments which the bank has been making in RMs, which I'll touch upon shortly. Network, the partnerships with insurance companies, whether it's LI, General Insurance, SGBs, a combination of all this has helped us grow the core fee income. The core fee income to average advances is now at 90 bips. And our endeavor is to make sure that at a minimum, we add 10 bips every year to that. And it is possible. I'll tell you why as we go into the next few slides when we talk about our distribution expansion plans. This is an important slide where it'll give you an insight into why we are so confident of delivering 5 trillion and ensuring that the ROA trajectory and the profitability metrics of the bank will remain very strong and robust in the years ahead. We are one of the banks which has the best granular deposit franchise in the country, without any doubt. And if you look at it, despite over the last 5 years, if you've seen the growth, we have grown in size. There has been intense competition. Despite that, we are at the high 80s, 88% to 90% is the range, which is the granular deposit franchise. Now, this is a bigger strength of Federal Bank, and it has been created over the years due to the hard work put in by several people decades back. It's not something which happens overnight. Like Shyam said, doing the basic boring stuff day in, day out, doing it well, will eventually lead to the right outcomes. There's no shortcut in this. It's hard work, but yes, we will do that. We have demonstrated and we'll do that. Our deposit growth rate has been higher than the advances. It's a deliberate choice to make sure that we have the ability to fund the growth. Credit growth opportunities are, as we see, are quite strong. Our guidance for this year will be met, 18 to 20% growth. And we are confident, of course, subject to any global events which will impact all banks if that happens. But we are confident of being an outperformer in the growth in the industry. We always used to do 1.3 to 1.4x of the industry growth. What is also important to note in this slide is the change in the business mix. The bottom side, the circles which are there, used to be 53 wholesale and 47 retail. In 3 years, it is just now flipped. It's now 54, 46. 54 for retail and 46 for corporate. This is despite the fact that the corporate growth has been very strong, but it's just that the momentum and the growth opportunities, which is present in both corporate and retail, has been well capitalized. Within the business, there is a change in the product mix, and this will become more evident in the years ahead. The high-yielding products will grow at a much faster pace than the traditional products. When I say high-yielding, I have mentioned in several of my interactions with you, unsecured, which is cards and PL, MSME, MFI, gold, CVC. They grew from being about 17% of the advances to now it's around 20.5% of advances as of December. Imagine a 5 trillion business number. And if we could get to 15% of that in a couple of years, so the high margin business will be a big mover of needle in terms of margin. That's the focus area which the bank is, which we are completely focused on to ensure we deliver. I'll speak to you in a while about a little more on the high margin business. And I talked about the gold loan growth. Gold loan, I don't want to steal the thunder of Mohan's presentation. He'll talk to you more in detail, but we have grown at 30% CAGR over last 3 years. It also gives us a good cushion when we keep growing the unsecured the cards and PL is going to grow quite significantly. So the RWA impact, if I can grow the gold as well equally fast and the unsecured, the ratios will not see a material change. That's another reason why I like Mohan a lot. I like Mohan, I like Nandakumar as well. I like Nandakumar because he is the head of branch banking and the execution happens at the branches. And that's the reason why I sit next to Nandakumar. My office is next to NKV's office. But on a serious note, it also gives me an opportunity to talk to him about feedback from the ground. We need to understand how the teams are perceiving what's happening on the ground. We have to keep that feedback mechanism open. And like I said earlier, the course corrections. We can't be just sitting and sending out circulars or saying these are the targets. It's a continuous loop. It's a virtuous cycle. We keep learning, we keep improving, we keep listening, and we act on the feedback. So thank you, NKV and Mohan, and more power to you. This is another important slide where I want to talk to you about what we are doing on distribution. I think there are three key themes which we focus on. This is the first one, enhancing distribution. Second one is on data. Data is our pulse, it's the powerhouse. And the third one is our operation subsidiary. I'll talk about all three. Enhancing distribution. If you would recollect that till about a year back, our investments in new branches was pretty much, I wouldn't say stagnant, but not at the pace at which it should. There was no need actually to do it at that time. But we changed the model post-COVID, and you'll see from branch-light distribution heavy, it's light branch, heavy distribution. That's the LBHD. What it means is, which again NKV will cover in detail in his session, to make sure that the branches which we open turn profitable more faster than what it used to be in the past. Our target is to open about 75 branches this year. We have already done 58. In fact, tomorrow 2 more will be 60. If you recollect in the Q1 earnings call, our MD had said that we plan to open about 250 branches in the next 2.5 to 3 years. Why do we need these branches? Tie back to the high-yielding margin businesses which we are focusing on. New branches are chosen in such a way that at least 2 of those high-yielding products, potential in that geography is huge. Whether it can be gold, it could be CVCE, it could be MSME. Any of these 2 is good enough to make sure, of course, more the better, but at least 2 of them. So the locations of the new branches are chosen very carefully. That's where the analytics team, we have Minu and Ishfaq here, if you could just wave out. He's standing at the back. Yeah, Minu is here. They help us in this journey. Okay. So we have already added, like I said, 58, another 2, tomorrow 60 branches. This is also going to help us in fulfillment of the growth in the gold loans. As you all know, the physical custody of gold is with our branches. Whilst we may work with partners, but eventually the physical custody, customer is with us and we are responsible. Another business opportunity which opens up with gold loans is we have the customer database. How do we mine that whole set of new customers who come in through the gold loan route? How can we leverage? How can we cross-sell? What products are suitable for that group of people? The next one is on ATM recyclers. They will see a slight reduction. That again, we review the profitability and then take calls as to whether we need to shut down or replace or move the location, or if there are some with close proximity, how do we change it? And another point on branches which I want to mention, the entire 250 branches, almost all of it will be outside of Kerala. I always get told you're a Kerala-based bank. I want to give you a few stats to disprove that, or rather change your perception. I don't want to say disprove, change your perception about that. We have crossed the inflection point where, as we speak this year, more than 51% of the new customer onboarding is outside of Kerala. More than 70% of salaried customers who are in our books today in the last 3 years who were onboarded are from outside Kerala. So we have all the right trajectory analytics in place to demonstrate that it's not just one market which we are dependent on. In fact, we are creating more strongholds, a few more states. For example, Tamil Nadu is another one. Very soon we'll have 200 branches in Tamil Nadu. We are already a household name in Tamil Nadu. We work with various stakeholders in that state, whether it's the state government for tax collection. We have a tie-up with the Tamil Nadu Startup Mission to fund startups, digital farmer loans. You will see all of that getting covered in the MARG session when they present. So it's how do we deepen our relationship at the same time expand where the business opportunity is huge. So I gave one example, which is Tamil Nadu. The last one, again, very important. Human at the core, right? RMs. The entire investment which we have made to a large extent in the bank has been focused on frontline income generating staff. We need to put people, this is PAN Bank, includes retail, wholesale, corporate RMs, treasury RMs, everything. Subsequent sessions, you will see a breakdown of this in some of the presentations, but this is the total RM headcount as we have as we speak. And the plan is to keep growing this. And this is where I'll tie back to what I said about the 3 key themes. The third one is our operations subsidiary. When I come to that, I'll tell you why it's going to be a strategic lever which we have. This slide is the levers for growth, which I touched upon. Again, the high margin business, I told you earlier, it was 17.4, 20.5 now, will go up substantially over the next 2 years. That's going to give me the levers on the margin. You will hear in detail about each of this, whether it's cards or PL, MSME, CVC. So I'm not going to talk about the details on this, but all I can tell you is the ecosystem has been created. We have great teams in place for each of this. For example, CVC, Shekhar, who's an industry expert, has come in, set up the team, and in a short span, we already have close to 2,000 crore book with very minimal NPA. He's got his team in place, and like I said, during COVID, we created certain ecosystems. We are now going to put all that into full force, and you'll see the impact of that on the top line and continuing to grow the momentum. I spoke about analytics. It's the 3 themes, enhancing distribution, data, and our operations subsidiary. This will be a common theme across all the presentations today. They are linked. Each of them are interlinked. The day when internet was first announced, I was amazed at how something as simple or as powerful as the internet was being offered free. I said, how can they offer this product free to everyone? It took me a while to realize that I am the product. The internet is not the product. I am the product, and every click of mine is data which somebody is gathering and using it. So we are all products for data. So the more we use, the more data gets collected. I'm sure many of you would have read the 4th draft of the digital data privacy bill, which has been put out by the government, and read the finer prints. It's inevitable over a period of time, the government and the large conglomerates will have complete hold on our data. The fringe players and digital marketers, the smaller ones, will just disappear. More about that separately. But data analytics, why is it so important for us? Like I said, it's not just for analyzing profitability or campaign management. It cuts across all functions. Cash optimization for my operations unit. We want to make sure that where is the cash lying, how many ATMs in the branches, how do we make sure that it's optimized? Or fraud risk management. As we grow our journey onto credit cards, I think the risk analytics on cards and fraud management is going to play a key role. Again, we've created a great team of young people who are there across locations, who are helping the business take the right decisions. And the last one, which I wanted to talk to you about, is FedServe. This was started in December 2018. I have Prashant here who heads FedServe. Prashant, can you just wave? He's there at the back. So during the break and lunchtime, feel free to talk to the analytics colleagues and Prashant. You'll get more insights. I was talking about RMs being added in the bank, frontline. FedServe currently, as we speak, it was around 350 to 400 less than 2 years back. We have doubled, more than doubled. We are close to 900 staff now. What we did is all the operational support required for the new processes, which were obviously whatever was permitted at that time by RBI, we added people in the ops subsidiary. I'm also happy to tell you that in November 22, based on our application, we have got approval from the regulator for the operations subsidiary to carry out few more activities, which include collections management, sales management, which is mentioned at the bottom. Which means it opens up the opportunity for the bank to create centers of excellence for each of these areas in the subsidiary. It's not about just adding people. It's about giving you the ability to re-engineer, automate processes, make it simpler, both for the customer and for the organization and for our people. Create centers of excellence, helps innovation, and it operates from 3 locations as we speak. Earlier, it was largely focused on contact center, account services, digital banking, but now we have already started adding resources for IT support, collections management, and sales management. So the opportunities to expand the impact, or in fact, you'll see the impact of FedServe coming through much more forcefully in the coming years. So that's a great strategic lever which the bank has, which you'll see come into play over the next few years. So, of interest to the analyst, what will be the levers for my ROA expansion? I've touched upon each of these themes, and the presentations and discussions by my colleagues later will re-emphasize each of this point and ensure that we deliver what we are committed to. It's not delivering numbers as an outcome, like Shyam said. Being the most admired bank, it's a continuous journey. We want to be in the top 5 in the private sector banks in the country. That's our aspiration, and we will. The pace at which we are growing, the momentum, like I talked to you about the business size moving from 5 years to 3 years to 2 years and 2 months, and then next one less than 2 years for sure. A time will come when we will probably be doubling every year. Why not? So to summarize, we have delivered on our promise. We are poised for growth. We have the ecosystem and the railroad in place to support the growth. And lastly, but not, and most important, we have the people to deliver on the commitment. Thank you.